Good. Hello, guys. Good evening. Um, it's 11:11. Wow, nice one. All right. So, I just want to give you guys a quick update concerning gold analysis that I posted on the 6th of January, Monday, 2025, which was this week when the market opened. Right. So, I also made mention that I will be available on YouTube this time around, back to back. I will try my best to be always active on YouTube. So let's take a look again into what I explained on the YouTube post, the YouTube video um, concerning gold. Sorry about that. All right, so the first thing that we did was to look at our higher time frame, the monthly time frame. We can actually see that this stuff is actually bullish, right? We are having a series of higher highs and higher lows, right? Apart from high highs and higher lows, we already know that this commodity is bullish. Now, if I were to mark the recent swing highs and lows, or the major swing highs and lows, this is the major high, this is the major low. All right, then price traded higher, gave us a new swing high. We retraced downwards, we have in swing low right here. Now price reacted from the fair value gap that was here, right here on the weekly time frame, and we traded higher, and the expectation was to see a new higher high, but in this case it reacted from a sell side inefficiency and tried to sell but didn't show any reaction or confirmation that it wants to go lower, did not even break this major swing low. Now it traded into that sell side inefficiency twice, trying to go lower but did not do that. Alright, as long as this higher low or swing low is protected, then I will not be expecting gold to sell off, because we have not yet print a structural shift whereby a bullish trend is being changed to a bearish trend. That was not seen, so the bias there is to still maintain a bullish bias. Now we also analyze that we are having an external high and external low. Now this range high and range low, that is the range that we are dealing with. All right, this high and this low, the major high and the major low, we are inside this high and this low, so that is the range that we are dealing with. Okay, now if price do not want to go to this low, it will actually show it to us, and it showed us by not showing a confirmation entry where it traded into the sell side inefficiency. As you can actually see, it tried to sell off, but what it did was actually sweep sell side liquidity from this point and did not go lower. And also you can actually see that this has been ranging, and we also use the algorithm D range. Now we were also on the monthly time frame where we use previous month high and previous month low, and when the month of January opened, we analyzed if it was to go lower or decides to go higher, and that was when we used our weekly bias of range high and range low to know where the price wants to go to. So the next target, we have already hit the previous week high, so we'll be anticipating for it to go to this buy stop on previous month high, and we see it continue going higher. For the monthly time frame, we can actually see it buying from this sell side inefficiency. Now that is what we actually have here. So since the range low is protected, this range low, then we are anticipating for it to go to the buy stops, the highs where we're having the stops resting on them. Now we go to the daily time frame, and we can actually see right here that we are ranging. All right, there was no series of lower lows and lower high to say that we are going lower, and also didn't see a bullish trend that was violated. We are right here consolidating and ranging. So this was the sweep of liquidity. They are caught right here. All right here, and you actually see price came back to that same area. Now if you look closely, I also explained that it cleared sell side inefficiency. The imbalance from the sell side was here. It balanced it and then finds its way out to go higher, thereby having this structural break right here, and the label there has a break of structure, right? Now also I showed us about this order block. Now it traded into this sell side inefficiency, and I was like, maybe it wants to use that, but New York opened, and like I always say, please, New York is the best time to trade for me. I don't know for you. I avoid trading London, as London could be liquidity, as also London could be in manipulation. So New York sometimes gets to kick out London. So I labeled this order block as that is the last sell candle that took liquidity. So that is, I also say that is how you get to understand what an order block means. Once you understand what is liquidity and how the algorithm are placed, you will get to know what this smart money is doing. So right here, this is the sell to buy candle. Now it's sold for the purpose to go for the sell side liquidity pool resting right here, which is pending sell orders. So if there are sellers in the market, then that means I am expecting to buy. So what will you think the smart money will do? Now, since we're having liquidity pools resting below this low, then let's imagine it this way, that it is equal to what they want to buy, to the quantity or amount that they want to buy. But that is, by the way, let's use algorithm to understand what it is. Those that study computer ICT, when I say ICT, I mean computer study, right? We learned logic, and we also learned algorithm. So if you're a computer scientist, computer engineer, things concerning computers, you actually know what algorithm means, which is a set of instruction given to solve a particular problem. So the problem that this algorithm is trying to solve right here is to go to where we're having pending orders. This pending are the buy orders and the sell orders. Now see it this way, that there are sellers in this market, and since the algorithm wants to execute a buy, and understanding that liquidity is money, liquidity is when someone has something to sell and there is a buyer, so there is an exchange that will occur between the buyer and the seller. Now the sellers are resting right here. The algorithm wants to buy gold to maintain the bullish move. It looks for where we're having those majority who are willing to sell, right? So it goes there to buy those sells. Now that is how you get to understand what stop loss means. One of my YouTube video where I talked about the meaning of your stop loss, you can actually go watch it and you will understand what your stop loss means. So your stop loss at an area of support is sell side liquidity pool, right? So the algorithm, now the smart money, or the algorithm takes the orders of those who are buying from an area of support and it respects them, right? It activates their orders, including, you always get to put your stop loss, right? So it buys from the area of support, keeps them happy, keeps them triggered in the market, and their orders are open. Then after buying, it boom goes into sell. Now understanding how the banks works or smart money, they don't quickly put all of their investment. They actually break it down, maybe 10%, 10, 20, 30, 40, 50, to it's summarized to all the money that they want to put in the market. But just note that they don't just pump money into the market like that. They split their money in different prices, different places. All right, that is how they manage their risks. So it buys, they pump the market to sell at a very high price, right? An expensive price, a high price. Now they sell gold at a high price for the purpose for it to get cheaper so they can buy it. Now where would they be willing to buy? They'll be willing to buy it where people are actually selling it. All right, and that is what we have right here, the stop loss resting right here, which is pending sell orders, and that is why we refer to it as the sell side liquidity pool. So we go and buy the orders. The algorithm takes those orders, buy them, and boom, deliver it to the area where we're having sellers, right? Buyers, right? Which is the buy side liquidity pool. All right. So it got so smart that it also decided to leave liquidity right here, right? So we are now having people who are selling from a resistance for a day, and if you're a day trader, we actually profit from that, right? So the price sold backwards to where the order block that was responsible to take liquidity and cause a structural shift from our daily time frame, which is the buy to sell, the sell to buy candle. Stop hunt plus structural break plus return to order block, and then boom, we went straight from for previous week high. You can actually see my labeling right here, which says buy sell liquidity pool because it created resistance level equal highs right here and previous week high right there. So this week opened and we went for previous week high. That is perfect. Running down to the 4-hour time frame, this is the 4-hour time frame, and refining this daily order block to the 4-hour time frame. This is the bearish order block right here, right? You see the structure of the hunt that are called right there, and the 4-hour shows us that if we refine, there is actually a fair value gap right there. So it used the fair value gap and we finally delivered to previous week high, and that was done on Monday. Like I said, Monday could be that low that we push the price higher, or Tuesday. So it happens to be that Monday actually did it. So if I was a swing trader and it hit previous week high, I could possibly get out of the market, right? And we are now reacting from this fair value gap, and I said I'm expecting this fair value gap from the sell side to not hold or push the price lower. Okay, so when the week and I also mentioned that I'm not expecting Monday or Tuesday to go below this low, but to continue going higher. So we will see from next week if we finally be drawn to that high, which is the buy stop versus on previous month high. So when it takes that high out, then we'll see. We want to go for the next nearest high, which is our external high, and then take that liquidity from there, right? So that is the breakdown, that is the outlook, that is the summarizing, and what is it called? All right, so that is the summarization of it and revision of gold analysis that was done on Monday. So that is it, guys. So take care of yourself, take care of yourself, and go get the course on introduction to financial trading on Udemy. You actually see that on the description link on this video, and have access to the financial lifetime mentorship in trading, which involves stock trading also. So bye, take care.